All right, that will be a tough one to follow, but I'm sure our next group of panelists and moderators are up for the task. Thank you, Dave, for a fantastic presentation. I think everyone took a lot of great points away from that. Certainly terrifying, but great knowing that we have a lot of fantastic people in this room and outside that are working to protect us from a lot of these vulnerabilities that are out there. Without further ado, I'd like to bring up our next panel. We have some fantastic people with backgrounds across private equity, venture capital, consulting, working on both the public and private sectors across cybersecurity. Please welcome our next panel.
Thank you. All right, good morning, everybody. It's my pleasure to be here to host the Market Outlook panel. I'd like to open it up. Ooh, sorry about that. I'd like to open it up for a moment to the audience for questions. Cybersecurity is a very amorphous term, as we've just heard. There's many different avenues to focus on. But when you first think about cybersecurity, what springs to mind? Is it Yahoo and Equifax? Maybe Facebook? Is it where can I actually find a qualified CISO at this point? Is there one available? Penetration testing, building those walls, cryptocurrency and blockchain, or Democrat versus Republican at this point? So from a show of hands, do you first think about major breaches? Are you thinking about finding that CISO? Is that actually even possible? Penetration testing, fortress building. So everybody's just focused on cryptocurrency at this point. Excellent. We just want to know where to focus the panel. All right, second try. Where are your companies actually spending the most money? Is it penetration testing, audits and certifications, regulatory, or cybersecurity insurance? So again, who's spending the most on penetration testing at this point? I know I'm awfully scary, but nobody's spending money on penetration testing? All right, we've done a lot of work in the last 3 years. Audits and certifications? Regulatory, GDPR. There's got to be somebody spending money, I hope. It's coming up. All right, cybersecurity insurance. All right, we're going to go back to crypto. Everybody's just spending money on crypto. Perfect. All righty. Cybersecurity is certainly a buzzword for the 24-hour news cycle. We've seen a lot of focus and a lot of momentum in the space, which is why we're here today. We even see firms struggling like Symantec this week in actually getting those financial reporting rules right. So without further ado, I want to start with my panelists. Rob, buzzwords aside, where are you seeing opportunities for growth in cybersecurity? What are the main trends that you're seeing people investing in?
So I come at this from a policy perspective. So let me start at the sort of 30,000-foot presidential level, and then we can kind of work down to the investment, if that makes sense. So what I'm seeing is, surprisingly, unlike in every other area of policy, the Trump administration is largely continuing the policies of the Obama administration. What does that mean? Well, that means that private companies are going to remain responsible for their own cybersecurity. So there's some focus coming out of the Trump White House about going on the offense, unleashing cyber command, but they're not well coordinated to do that. So that means the market's going to stay there. The second piece of it, though, is that this administration is going to back off on regulation, which will mean that there will be less of a driver for cybersecurity coming out of the US government. What I'm seeing counteracting that is obviously Europe with GDPR, but also large banks, many of them in New York, who are essentially stepping up and regulating the whole industry that supports them. So the third-party risk is effectively a private sector regulator that is driving cybersecurity spending. So I think that's the good news for investors. The bad news for the rest of us is the attacks are just going to get worse. I think we've seen this with the pullout of the Iran deal, that threats are coming back from Iran. We're seeing that with the trade war with China. China stepping up IP theft again. And then finally, I will say that when, most likely, the negotiations with Korea collapse, we'll see an uptick from North Korean activity.
Well, that's optimistic. All right, right, so Mike, let's turn a bit. Is there a pending unicorn in 2018 that we should be thinking about?
A pending unicorn. I take the position that the definition of unicorn is overvalued, and so I hope there isn't. But I think the thing to keep in mind is that cybersecurity in its traditional sense is really putting security technology over legacy systems. We think the future is enablement and monitoring and management, and you will see, I think Dave DeWalt was right, you will see some heavy spending in those two areas. Those markets are a $3 to $4 trillion market as opposed to just standard cybersecurity, which is about a $170 billion market. So we started investing in 2002 in cyber, did our last deal last week in cyber, but the evolution has been really dramatic in the kinds of places and the kinds of transactions we're looking at. I think you will see some significant IPOs in the next 12 months in the cyber area. Whether they're unicorns or not, I'll leave to the markets to tell us.
All right, Jay, what aspects of cybersecurity do you see are actually untapped for growth?
It's a good question. I mean, we're probably at, I think I have to go back to what's the number one problem that we're all facing in cybersecurity, and it's not technical. Number one problem is the lack of talent. It's the million unfilled jobs in the world today, growing to 3.5 million by conservative terms by 2021. So if you can come out with an innovative piece of technology that can take, XYZ control managing risk to X acceptable level, it takes 10 people to run it, and now you can manage that risk with 2 people, it's an investable area, whether it's an investor or whether it's a CISO, And so to me, I can't say there's any one area, because I believe every single aspect of an information risk and security program or cybersecurity program, whatever you want to call it, for whether it's Fortune 500, Global 2000, or even if it's SMB, is ripe to be replaced if you can help address the people problem, because that's really where the stress is coming today.
All right, excellent. Richard, where do you see the government or even public companies really spending the most dollars on cybersecurity?
So, on a comment that Warren Buffett made last week in terms of unquantified risk around cybersecurity, and an insurance maven commenting on unquantified risk and the potential of catastrophe in that segment. Government focus on critical infrastructure, industrial, sort of the crown jewels of any country around the world, are probably the focus area of investments for governments both in and out of the United States. It's an area that probably over the last 5 years has received the least traction or the least investment, and probably underinvested in relation to the overall risk in the market today globally. So critical infrastructure, I think Warren Buffett hit it right on the head. In terms of unquantified risk there, it's substantial, and probably follows on to many other discussions around cyber insurance and how cyber insurance is managed around this whole segment.
So I found in cybersecurity there's always a surprise every year. We'll go from each of you. Is there any surprises that you've seen this year, or things that you weren't expecting from an investment perspective, Rob?
I think what has really surprised me is how hard it has been for good technologies to get investment. I have thought that there was going to be a separating of the wheat from the chaff, but what I've seen is that some companies that I would put in the wheat category have not been able to raise. If they are early stage, investors seem to be just doubling down on what they've already invested in.
Richard?
It's not a surprise, but the volume of companies, volume of cybersecurity companies, startups that are out there, it's really not surprising in terms of the talent that's out there and the problems to be solved. But the volume is quite substantial in terms of startups that are out there focused on areas that potentially are not platforms, they're not products, they're niche areas, that type of volume.
Jay, any surprises from your side?
I'll answer from a recovering CISO perspective, turned investor. And that is, as I spend probably at least a third of my time talking to security officers, I think there's two things that have really come out this year that are interesting, and I think they both present opportunities on the investment side, one more than the other. One is just the focus on basic IT hygiene. We have too many shiny objects and people haven't implemented it appropriately. So there's a really focus back to the basics, and I think Equifax just raised that to the forefront of everyone's minds. We know it. It's not sexy. It's not fun. It's not exciting, but it's mandatory, and we're hearing that across the board 100%. And the other one, which I found more intriguing and not quite as obvious, was the refocus on identity access management with the emphasis on identity in the access management. We have, as security leaders, pushed that to the infrastructure team because it's 5 years and $50 million overran projects is where people go to die. It's almost like BCP or something like that. And now with the four logical and physical walls completely deteriorating in every single company, even the largest banks that said they're not moving to the cloud, they have now embraced the fact that they are moving to the cloud, or they moved with or without them knowing it. The only way that you can command control over your security controls, again, is to focus on identity, because the identity is the only thing that can persistently follow you regardless of where you're at. So I need to wrap my program around identity again. And so that was something that wasn't apparent to me until talking to literally dozens and dozens, maybe upwards of 100 different security officers, and hearing a theme, not as explicitly stated with all of them, but different problems that they are facing, and kind of stitching that together and then going back out and testing the market. So I think there's a lot of opportunity there, both on the customer side and on the investment side too, because I don't think that nut's been cracked.
Mike?
So I've got two answers, I think, to this. The first that I've seen here in 2018 is an increase in chaos and uncertainty in the space. With all of the investing, the 3,000 companies, with all of the investing, the amount of increase in chaos and uncertainty is really dramatic during this period of time. That's good from an investing standpoint because that creates opportunities to invest in those areas. I think we have to think of non-traditional areas of investing for the cyber piece. The second area, which we're now hearing more and more and more out of Washington, is deterrence. That the government is going to take an enormous amount of money and put it into deterrence. How to deter nation states from attacking our critical infrastructure. And we now know that every company that comes in to see us says they can solve 99.9% of the cyber problems. Every last company comes in and says that, and as you can see, they don't do any of that. And so you have to come to the reality that you can, while you might be able to deflect and defer, you might be able to make your systems more resilient and more trusted, you're not going to make them 100% protected. So the question then comes down to is what role does the government play? Government doesn't own critical infrastructure. Government cannot protect critical infrastructure. It's the companies that own the critical infrastructure that have to adopt those technologies. That's good because that creates huge markets. But what role can the government play? They play a number of roles. But the most significant one where we're going to see some major investing is in deterrence. How do you say to the Russians and the Iranians and the North Koreans that if you attack, you're going to have this cost? It's going to cost you this. And it's not just sanctions, but it's going to be significant. So I think you're going to see a lot of investing. We're starting to see some of that come forward for investing in the future. Combination of deterrence and the companies that own critical infrastructure doing the right thing, I think we'll see that trend develop over the next 18 months.
I think we should stay with Washington for a bit because it's hard to think about Washington, D.C. and not think about cybersecurity for some reason. Rob, from your perspective, thinking about GDPR out of Europe, do you see similar rules coming to the U.S.? Do you see an investment opportunity as a result because U.S. companies will be infected? What are your thoughts with regards of policy out of Washington driving investment strategies?
Well, I mean, I think everybody in this room's probably gotten hit with that same avalanche of emails from every data company out there that has any piece of information on them based on the GDPR rules coming out. And so from that perspective, right, is Google ignoring GDPR? Is Microsoft ignoring GDPR? No, they can't possibly. They've taken a model where they build once, sell globally. And so that means that effectively these US companies are being regulated by European regulators. I think it's very unlikely, though, that in this administration with a very strong anti-regulatory bend, we're going to see anything like that. Even with Mark Zuckerberg saying, please come regulate us, even with what I see as a softening to the idea of regulation in many industries, I don't think for political, ideological reasons, we're going to see an embrace by this administration of that approach.
Jay, what are your thoughts from Washington, D.C. and the political spectrum, and how is that impacting your own portfolio?
That's interesting. I don't know. Some days I think it helps it, other days it probably hurts it. So you just never know what's on Twitter these days. I mean, for us, we don't invest, unlike some of my colleagues here, we don't invest in companies that have a government go-to-market first. We just don't add the value, say, a Paladin would on the government side that we can on the commercial side. And so every single one of our companies that we invest in will absolutely sell to the government, but the first focus is really in the commercial side, and then build the business there, and then over time, hopefully build up a good federal or state and local government business. And so from a buyer's perspective, it hasn't really impacted us. I would say all of the different craziness that may or may not come out of Washington on any given day, I haven't seen it really dramatically influence at least a lot of the companies that we're in. I will echo, though, like on the GDPR front that you were talking about earlier, I was talking with the CISO for, call it, one of the top 3 largest banks in the world last year, so not even this year. This was probably 9 months ago, and I talked to him again last week, and not much has changed. They're in 140 different countries. He's based in the US. He's a global CISO, and he said he was spending 60% of his time on GDPR. It's kind of crazy. So I think that, you know, policies and government can influence us. I think anything that's happening in Washington is not influencing the amount of time security officers are spending compared to what we're seeing coming out of Europe right now, despite the craziness.
Well, it's always good when regulation drives bottom line. Richard, from your perspective, aside from Washington, what are you using to drive investment, your investment portfolio? Where are you investing?
So we're investing in the U.S. significantly, but also in Europe. And I think some of the drivers in Europe around GDPR are showing up around spend, in indigenous spend in Europe in terms of cybersecurity spend that probably in the past trailed the United States and now is catching up. So we're seeing, you know, whether it's GDPR related or other regulatory driven investment in cyber, we're seeing that happen a lot outside the United States. And governments, you know, having a big say in that to a large degree. May 25th is GDPR. Everybody in Europe, everybody around the world is preparing themselves for that. So there are certainly, you know, Jay's companies and ours and Mike's that, you know, are playing in that segment, and, you know, that opportunity for them is vibrant at the moment.
So the audience seemed to really focus on cryptocurrency in their response. Mike, do you think that's the wise move? Is that where investment dollars should be spent?
No. You know, I think to get to what's going on, before you get to cryptocurrency, you really have to get to some very basics. How many of the Fortune 500 companies list when they file with the SEC, list cyber as one of their material threats? How many do you think out of the 500 in today's environment? The answer is 207. Something is wrong if only 207 of the top 500 companies in America list cyber as a material threat to their business. Think about that number for a minute. So Jake and Richard are right, or Jay and Richard are right on when they talk about GDPR, because that's going to drive American companies having to comply with that. So you're going to start to see that kind of compliance. Washington is chaotic. If you haven't read, the top 2 people that sat on the National Security Council, is that right, Rob, were fired after John Bolton came in. They're getting ready to downgrade. Was this the position you had? downgrade the position that this man had during the Obama years, getting ready to downgrade that cyber position to kind of not there. Now think about that for a minute, okay? The greatest threat against us is that. So I think you're going to see leadership out of Europe because those are mandatory requirements. There's another couple of other requirements going through Europe that are kind of interesting in this concept, and these are governmental things. This is on the EU basis. There's some discussion around that if you come to market with a product, service, or technology in Europe, it must be cyber secure. Now, how they're going to do that, I don't know, but there's some discussion along those lines that they're going to require that. If they require that, then the world changes dramatically, because then everything that's going to be sold there, supposedly, is going to have to comply with that. Whether they get that passed and whether it's practical and whether it's something that can be reviewed, I doubt, frankly, but that's kind of where it's going. Washington right now is not a leader. Our military is a leader, and we're seeing more things coming out of the military commands, technologies come out of military commands. We're seeing more come out of the NSA, CIA, all of the three-letter agencies are coming out. And what are they looking to do? They're looking to do dual use. So they want to make sure that the product, service, technology can be utilized by the government and can be utilized in a commercial sense. In that side of it, the military is vibrant and they're spending the money and they're doing what is necessary, I believe. But outside of the military, it's very difficult.
Rob, do you have anything to add?
Yeah, I mean, I think the scary thing for me is that I think John Bolton is making the mistake of coming back into government and pretending that nothing happened in the last 20 years since he was last there. And so this sort of namby-pamby cyber stuff isn't really all that important. Push it into the Defense Directorate, get rid of the Cyber Directorate, eliminate my job and that of my 8 colleagues in the NSC. I have no idea who's going to do the work that went through our office, which led to 12 to 16-hour days, 7 days a week for that staff. What that will mean in terms of the breakdown in the development of policy, and more so the handling of crises, I really just don't know. I mean, we were convening what we called the Cyber Response Group almost weekly to deal with every major incident that was hitting the country. I have no idea who would chair that if they go forward with this vision. So I think the answer is, I used to say, right, there was no white horse that was going to ride in and save you in cyberspace. That's really true now. There's not even going to be anybody to help. There's going to be no support coming from government, I think.
So with the dislocation of the market and the impact of DC that we've talked about, I want to go back to one of Mike's points, which was about 200 companies actually list cybersecurity as a threat. So not just cybersecurity investing in companies that actually produce cybersecurity products, but how would each of you protect your own portfolios against an Equifax or a Facebook or a Yahoo type breach? What are you guys doing to actually protect your investment and portfolios? Mike, do you want to start?
Sure. So part of our due diligence, when we do due diligence on a company, is what is the due diligence of the company, or what is the cyber protections that the company that we're investing in has in place? If you don't do that, you're crazy. If you're in the business, so that you want to have good practices. We have a long list of questions that we ask. We have some people, if it's particularly complex or complicated, that go in. And then if they don't have anything in place, then we suggest what needs to be done. So we add some value to that particular investment. And then we continue to monitor that. That's a question that's brought up in our boards that we sit on. We try to sit on most of the boards of the companies that we invest in to constantly be updated, to make sure they're updating and doing the kinds of things that we expect to do. And then we do that ourselves for our own company, to make sure that the links and the things that take place are not corrupted.
Jay, do you have any thoughts?
Yeah, I can answer from two different ways. I'm still a senior advisor to Blackstone, overseeing their portfolio companies, and then I have my portfolio. So you got big companies and small. On the small side, though, let's pick on small security companies, startups. You know, almost all of them, we have third parties that will come in and do, whether it's penetration testing or code review or advisement or some kind of oversight. Even though we have the greatest security minds in those companies working, you can sometimes get this groupthink, and you can think you're the best. You can, you know what you need to do. And so across the board, whether it's a 20-person startup or an 850-person mega startup, we have third parties that we're actually paying of other security companies to come and give us their views and make sure that we're doing the right thing. So, that's one thing. Put that aside. And the second piece, we think about, on more of a traditional, private industry kind of large mid-enterprise companies. We have a security stack that's part of a 100-day plan that we roll out, where we make sure we have the right leadership support, the right budget, we have the right leader in place, not the right operator in place necessarily. We immediately ask the question, are you breached? And that immediately asks the question, do you have the instrumentation to know if you're breached? And the answer is almost always no. And so then you do some kind of compromised assessment or pre-response or something to identify if you have a breach out of the gate in the first 100 days, because it's easier to clean it up in the first 100 days than it is a year later when you're building a program and you realize you've been breached the whole time. You call into question the integrity of everything you've been doing. And then we immediately deploy some various forms of table stakes protection. So some form of advanced threat prevention capability is table stakes. No one needs to give me an assessment to tell me that. Just deploy it, do it, forget about it, move on. And then there's no excuse not to have two-factor for all remote access, period, full stop. Just deploy MFA, forget it. You don't need to ask anybody. Everybody should do it, big or small. And so there's some basic hygiene things like that that give you a hard crusty outer shell, that give you a little bit of breathing room, hopefully, to go and do the things that are going to take you 1, 2, 3 years to go and execute on.
Richard, from your perspective, do you have
I
anything
mean,
to
very similar in terms of our due diligence exercises and the assessments that we make on portfolio companies. Many of the measures that Jay and Mike mentioned, I think, the focus area really on hygiene, the brushing and flossing, the basics of cybersecurity. It's surprising, some of the really advanced cybersecurity companies out there still focusing on the brushing and flossing, on the basics, the cyber hygiene, and getting that correct, where vast majority of vulnerability exists, and that continues to be a challenge, whether you're a cybersecurity company or not.
Rob, from a policy perspective, any tips or tricks that you can add for protecting your own portfolio?
I think when I look at it from a policy perspective for the small companies, I see that they don't necessarily understand the policy dimensions of the markets that they're moving into, and that always surprises me. And so they're not necessarily thinking about their products in terms of things like, how do we fit into the NIST cybersecurity framework? How do we fit into the NERC SIP rules? And because they're not doing that, they're A, losing an angle for selling, but B, they're going to run into a compliance headache down the road where they may not have done things that their markets are going to require of them.
So switching gears once again, and then I'll open it up to questions. Jay, with Spotify not actually requiring iBanking, is anything about the new investment model changing how your own model is working?
Well, let's face it. I mean, while there's been more security IPOs of late, I think very few of us go into at least an early stage startup saying we're going to IPO this company. Most of your exits are going to fall on a good day between $150 and $300 million, or you've got a problem. Very few, very few will trade for north of $300 million, and there's very few unicorns out there, and even some of the unicorns aren't successful IPOs. Personally, we think out of the 25 to 30 security investments we'll make out of our current fund, maybe we'll have an IPO in it, maybe we won't. We're not underwriting that necessarily. And so I don't think that Spotify really thinks about how we're doing and are investing any differently, because we're just not thinking about that. We would love to IPO some companies, but the likelihood is probably a bit lower.
I do want to have a chance for the audience to participate. Any questions? I could keep going, but I get tired of my own voice.
We can
All
pick
right.
on people in the audience too.
So the OPM.gov breach was not discovered until 6 months later by Einstein. And I'm just curious your thoughts on that pretty much whether the current White House administration has a cyber czar or not, we're always behind the 8 ball and we always are reactive to a breach. From Yahoo, 1.5 billion records, to OPM, 22 million. What do you recommend we do differently to get more proactive?
So the question was with regards to OPM and what can we do to be more proactive? Rob, I think this is yours.
Yeah, I mean, I think that the good news is that the days to breach discovery has started to come down, but it's come down from like 300 days to 250 days, so it's going to take a long time on that trajectory for us to get there. I mean, I think the answer is really we need to create the right incentives from a policy standpoint, or if not from a policy standpoint, from the top of the food chain, the food pyramid, with the large cap financials pressing down requirements on their suppliers so that these breaches are discovered sooner and that these breaches aren't discovered, as most of them are today, by third parties, right? It's mostly finding things on the dark web, FBI, IC, passing to FBI and DHS. That's how most of these breaches are discovered. And so getting better at detecting when you've been breached is, I think, the key place the market needs to move. How we make that happen, I'm not sure at this point.
Well, especially with 72-hour notice requirements, et cetera. Jay?
Let me comment on that too. The dwell time has been an issue for a long time. It's not OPM, it's not Yahoo. The bigger concern, in my opinion, is the shrinkage of time from compromise to data exfiltration. That window used to be like days or weeks, and now it's minutes or hours in many cases. So that's a lot scarier to me. And so as we think about building programs, you know, can you detect or block it from the outside in? All right. Can you detect or block it from inside to inside? Can you detect or block it from inside to outside as we think about our layer of defense? And so we have to think about all the different movements. And the hope is that one or three of those, you know, or six, or depending on how you want to put it together, you know, working together will somehow not necessarily identify I have a compromised host. I really don't care that much about a compromised host. What I care about is that compromised host doing harm to my environment. And that's either destroying something in my environment, stealing something in my environment, manipulating something in my environment, you know, integrity issues, whatever it may be. So if I can identify that and stop it before it creates harm, which in many cases requires exfiltration, then I consider that a win. And so we have to think about building our programs that way and really focus a lot on the exfiltration piece, because that time for data exfil is just shrinking dramatically.
Mike, did you have additional?
So I take the question in two ways, and I think Jay and Rob have it absolutely right. But we have to think of it in two ways. Number one is how quickly can you find a breach? I think that's where Jay was going. But the area that is unconscionable is the amount of time that these companies wait to then disclose that to their customers. I think we just saw the SEC bring a fine, I'm going to get this wrong, was it $30 million against someone that waited 6 months, 9 months, and they trafficked, and the personal information of the people that were their customers was out there for that period of time until they deigned to then publicly disclose it. I think as that becomes a costly exercise for companies, they're going to get more and more into being able to quickly identify and then quickly disclose. And if the SEC goes down that route, more companies are going to quickly disclose, thus hopefully protecting some of what has been taken or stolen or utilized.
The irony not escaping that it took the SEC itself 6 months to disclose when they had a breach.
It did. They should be fined too.
Then they would have no budget left.
Anybody here from the SEC? Nobody? They should be here listening to this. Go ahead.
I have no comment. Richard, do you have anything to add to the question?
Yeah, I mean, looking at it from another angle, so we've spoken about the technology, we've spoken about, you know, some of the failures out there, the lack of regulation, the direction that regulation is going in. But we haven't spoken about capital markets and, you know, the ability of capital markets to actually transfer risk. And within that process, to create transparency, to create the types of things that market-driven, potentially derivatives around cybersecurity and cyber insurance could present to markets. And you know, that's something where we're still in the early stages of developing the data, the technology, the ecosystem that you need to have that type of derivative ecosystem existing around the cyber insurance landscape. But the potential there to drive transparency, as capital markets sometimes and can do, is a potential that you know, can make up for some of the lack of controls that are there now.
Interesting. One more question?
Yes, so you, as investors, are you seeing many companies come in with a strategy of having the cybersecurity investment that they need become part of an overall process? For example, you're seeing a lot of public companies now make announcements saying, here's our crypto division. And, you know, we're the biggest firm in logistics. We're the biggest firm in big data, you know, medical records or whatever. Have you seen many companies come in on a package basis with, you know, generally, like, for example, with the whole power business, people that have technology products and power, and you look at this as another part of the market, perhaps would there be a lot more money available if people did market themselves that way in terms of the investors that need money?
I could take you on the powering. I mean, we have two tracks. We have a power and technology fund and a security fund, and so I'm a partner in both, although I'm not a power expert by any means. But we have three of the seven large utilities and a large manufacturer on the industrial control side that are key investors in that fund. So we have a lot of view into the critical infrastructure. And we have been pitched 10 times to Sunday, you know, all these different vendors that are in critical infrastructure that want to get into cyber because they see that as a huge growth opportunity, and they have an existing platform there. They have no freaking clue what they're doing though, at all. They move, you know, slow as molasses. Basically, their great idea was an idea in 1999. They don't know how to bring. They're hardware based for the most part. They're not really software focused. Everything's open. You don't want to touch the grid. I can't even have a spam port I can plug something into, you know, because I haven't made a configuration change in 20 years. And I'm afraid if I actually do that, it might break, basically, you know. And so I know you asked a broader question, but I can tell you, you know, our hope and desire that these legacy manufacturers or whatever that exist in critical infrastructure are really going to solve our problem is pretty small. It does take new innovative security blood coming in, I think, that can figure out how to work with those guys in order to be able to do that on the critical infrastructure side, particularly on the power side. And even that is like moving mountains from time to time. Mm-hmm.
So my final question of the day for everybody. We started with the future this morning of cybersecurity and where we were going. But currently, bring your own device is something that most firms have gone to as a policy. And securing those mobile devices is one of the big topics I find in struggling with to actually make sure they're secure, especially as you're dealing with personal information, et cetera. From an investment perspective, have you been focusing at all on the firms that have changed their policies to bring your own device and mobile security as part of your investment decision? Rob, let's start with you and then go all the way down, and then we'll turn it over to Lindsay.
I'll tell you a fun story on bring your own device. We were sitting around thinking, okay, what do we need to do to secure the federal government? And we kept hearing about this trend of bring your own device happening in the private sector. We figured it would eventually come to government in like 5 years. And then 3 or 4 days later, we get an email from the White House IT office saying, you've been selected to pilot our new bring your own device policy. Okay. IT got ahead of where policy was. Fast forward 2 years later, what happened? Well, the White House got breached by the Russians. That's all public. That's all old news at this point. What happened? Everybody got a new phone secured with, I think, 4 different security applications. And we're back to having 2 phones stacked on the table in every meeting.
So that's the way not to do BYOD.
And here I was sure you were going to go with FBI texting. All right, Richard, what are your thoughts on bring your own device and
go back
investing?
to the cyber hygiene, asset discovery, understanding your assets, with disparate corporate organizations around the world. Inevitably, you're going to have people running around that are not protected, haven't downloaded the latest version of any of the apps that they have on there. I think that cyber hygiene needs to be drilled down deep into every organization. It needs to be, number one priority when it comes to cyber. Probably a chief hygiene officer probably makes sense. Someone in charge of flushing and brushing will probably do away with a good amount of some of the nominal, breaches that are out there. And they're not nominal in terms of cost, but nominal in that they could have been prevented with that cyber hygiene.
Or with my 6-year-old and stealing my phone.
Yeah.
Jay?
So 2013, I talked about a trifecta that was happening back then. It was an increasingly mobile workforce that expects to have access to data anywhere, any place, and a 21-year-old guy in finance that writes better Python than any of your guys in IT. And guess what? That hasn't changed. It's only gotten worse. And what I was talking about that is there's a huge opportunity there because we don't know how to solve that problem, and we don't know how to solve that problem today. BYOD fits right in the smack middle of that problem right now. So is there an opportunity? There's a huge opportunity. Do we figure out how to solve it? Absolutely not. It's just gotten worse. It's moving faster than what we can move, I think is what my colleagues here have already said. But it's definitely front and center. And what it probably leads you to is moving more to a data-focused type approach of some sort, where you're trying to figure out how you can better secure your crown jewels, which is your data. It's not the application of the network or the device or anything like that, and kind of disintermediating the two. But that's complicated infrastructure. It's costly to deploy. You have to agree on standards, and all these things are trying to happen, but they haven't really emerged that much yet.
So Mike, last but certainly not least.
So it's interesting. I think as you think of the future, and I think this is where you're going with the question, is as new digital platforms are going to be created, they have to be enabled with the new security. You can't have security over the top of legacy systems. You need to have enablement when you create these platforms. To some extent, that'll take care of the gap between where technology is and where policy is. Technology is probably 15 years ahead of policy. And as long as you've got that kind of a gap between those two, then it's going to be everyone for themselves. Survival of the fittest, smartest. Some people are going to managed services, saying we can't figure it out. CEOs are sitting there asking only two questions. Do I have the best technology, the best requirements, the best policy, and will I survive? Those are the two questions they ask. Part of that answer, I think, has got to be for the CEOs to say, if I've got the best technology, I know that I don't have enough and never will have enough. But do I have a managed service program, technology-driven, we think, would be the right way to go, that can plug into what you're doing inside of your systems, especially since there's not enough people that can be hired to do what needs to be done. So I think that's a little bit of where I think this is going.
All right, well, it's my pleasure to be here. Thank you all for participating. Thank you to the audience.